So I want to ask you first about the behavior of the markets. We had this trading halt early in yesterday's trade when the S&P was down 7%. Trading resumed after that, seemed to be orderly. Today, we got a little bit of a pop, well, a big pop at the beginning, but that's fading. What does all this action tell you?
Well, what's very interesting is when we were discussing putting this trading halt in, you had kind of the academic point of view, which says that if an investor wants to sell, the fact that investor has to wait 15 minutes will not change that selling decision. What we saw yesterday is that 15-minute pause really did work. And it speaks to the fact that investors are not always logical, right? We're emotional beings, and the fact we had 15 minutes to reconsider it changed in many ways the direction of the market, or certainly mitigated it, I should say. So I think academically, a 15-minute pause doesn't make any sense, but we saw in real life yesterday it made a meaningful difference.
And at Virtu right now, where you're chairman, there's a lot to do with liquidity, focus on helping people make the trades that they want to make. What kind of behavior and concerns are you seeing from trading activity right now, and what do these levels on the VIX communicate to you?
Sure. So I would say, with respect to Virtu, the exchanges, and really everybody in the ecosystem, what you're experiencing is volume. This is volume you've only tested in the labs. So from a laboratory point of view, you have the systems in place, but then to experience that volume in real life is quite a different, outcome. So the fact that Virtu and the exchanges and others is held up in this massive wave really is a great credit to the industry, to the individual firms, and certainly I'm proud of how the markets has performed from an infrastructure point of view. Clearly, we'd rather see the markets go higher than lower.
Okay, so we got your take on the infrastructure piece of this, but given the fact that we are seeing such extreme moves, such extreme volatility in the markets overall right now, your assessment of that and how that fits back into this macroeconomic picture for which we don't have very much info yet?
Yeah, I would say first with the macroeconomic picture, as a person who deals with markets and financial situations, I really want to focus on the real world today. And when you look at the real world, 8%, $8.8 trillion of the world's global economy is tied to tourism, about 10%. So there's no way that number holds up. So it's impossible to believe that we do not go into a real recession, right? That will happen. So I'd also say when we think about this... So you expect us to go into a recession? Well, you have $8.8 trillion in travel and leisure. That's going to get cut in half, maybe by a third, maybe by two-thirds. So to take $4 trillion out of the global GDP is certainly a major recessionary force that's going to be hard to overcome. But I think it's important to recognize, I would predict the recession will have a V shape to it, in that when you look, and Bob Pisani mentioned it, you're going to have very cheap oil, you're going to have near zero interest rates. So as we get past the virus concern and the vaccine is developed, you had a strong consumer going into this outcome. You'll have a strong consumer ready to come back into it. So it's going to be impossible to avoid a recession when you're going to lose, probably $4 trillion or more from the global GDP. But I think you can see a V shape to that in time.
Bob, if the all clear is the availability of a vaccine, I mean, Fauci would argue that's a year and a half away, maybe shave that down to a year. So it's a V, but the tip of the V is a year long.
Yeah, I would say this. Certainly the vaccine would be the ultimate, but you can have therapeutics that will help mitigate the situation, or you can have a situation we see hopefully in China where the number of new cases declines and it seems to be manageable and we're past the peak. So you could instigate the V as you get to that part of the progress. And certainly I'm encouraged. I also pay close attention to what's happening in Singapore and the warmer climates. Hopefully that's a predictor to what will happen here as we go into the summer months.
Bob, isn't this just as much about sentiment, though? Right now, people are canceling trips that they have planned for April, maybe even May, based on the uncertainty that we were just talking about around what the impacts are going to be. Even if the economic conditions otherwise return to normal, the health situation returns to normal, there's no guarantee that the optimism level is going to return to what it was before, right? And so does that have an impact on that V?
I think you're completely right. There will be a lag factor. People will have to have data that says this thing is under control. They'll probably look for data that confirms that viewpoint, and then they'll evolve into normal behavior. But that can happen in a relatively short period of time. And I love Bob talking about the VIX and what it means, but understand the VIX is of the moment. So we have a 50 on the VIX today. That can go to 30 or 20 quite quickly. And consumer sentiment can follow the VIX. We're at a 50 level today. People are definitely canceling trips. They're not going to travel. They're going to try to cocoon at home. But that sentiment can change down to 30 or 20. Maybe not the 10 VIX that we had last year. That's certainly in the distant future. But if you get down to the equivalent in human sentiment to a 20 or 30 VIX, you can certainly initiate the second part of the V.